This is the session Unleashing Conscious Capital. So if you were hoping to unleash something else, you can see your way to the door. Today's panelists will discuss the capital markets blind spot for businesses that think beyond the bottom line. They will discuss the opportunities and challenges and how investing must evolve to help these ventures thrive. So before I hand it over to Bart, I'm going to ask you to do what every other session host has asked you to do, which is silence your cell phones, wait for the microphone before speaking when we get to the 4 Q&A sections that Bart has planned. And the session will end at 2:45. And please fill out these surveys that are on your desk and hand them on the way out, because it helps me and my team make this forum better each year. So with that, I will hand it over to Bart Houlahan, who is the co-founder of B-Lab Company. Thank you.
Thank you, Jessica. Hey, everybody.
Hi.
So I got to be honest, this is probably the second worst segment of the entire time frame, because it is right after lunch at 1:30 on Thursday. Energy is flagging. I get it. I know my energy is flagging a little bit. And so we're going to try something different. If it becomes unruly, I'm going to pull it back. But we're going to try something a little different, all right? We're going to try to actually create a little more of a dialogue around this particular topic, because I always find that the audience often has as much wisdom as the panel, if not more. And so we're going to try to do this session a little differently. And it's going to begin to get you guys warmed up. We're going to begin with each of you turning to the person next to you and giving one sentence on why you chose to come to this panel, considering the fact that there were great panels in competition with this one. One sentence. You got a minute and a half. Start, please.
Us too.
Yeah. I knew this was an unruly group. I could tell at the very beginning. Okay, so we're going to do, this is going to be broken into 5 segments, 5 15-minute segments. The beginning is going to be, our panelists are going to talk specifically about how their work relates to this topic specifically, unlocking conscious capital. Okay, so not a full bio, because you guys know their bios. It's a rather distinguished panel. So we're going to have them talk specifically about how their work relates to this. And then we're going to do 4 different segments. And at each segment, we're going to do a little Q&A. So we'll talk for about 10 minutes, and then we'll open it up for 1 to 2 questions. And so know that you don't have to wait for your questions all the way to the end. We're going to do it throughout to see if we can stay awake through that 1:30 Thursday slot. Cool? Everybody with me? Yeah. Awesome. Let's get going. Perry, how does your work relate specifically to unlocking conscious capital?
Hello, everyone. I'm on about an hour and a half of sleep, but so I think I'll try to be as brief as possible. I think Kickstarter itself, I think that may be more of the obvious. I think it's allowing people to fund other people's projects. It's I think very conscious capital. There's been now over $3.5 billion pledged to projects. Will be 10 in 2 weeks, Kickstarter. And thank you. And I think there's that part, which I think many of you probably know quite well. And I'm actually here today to talk about a different part, which is that how does Kickstarter itself, as a public benefit corporation, that's a kind of a hybrid alternative form, non-profit maximizing, mission-focused, mission first and foremost. How do we have access to capital, given that what appears to me that the capital has not been designed to work. It's yet again, a binary space. And so I thought, what better place to come than here to try to unpack this stuff I found challenging in my many years out having conversations with many great, wonderful, generous people and organizations. We have never been able to find much of a way to work with each other, even with a lot of desire to, because of a lot of the just structures that have existed. And last thought is just as a kind of one of the kind of best-known public benefit corporations, which is not the end-all be-all, but it's the current form in the U.S. that really has the most traction, us in Patagonia having the most kind of name recognition. I see, and I'm reached out to by the generations that's coming behind that is seeking these alternative structures. And by far the number one thing is, will people give us money? And the answer right now is no. And it's forcing people into profit maximizing forms where they're going to just be custodians of their organizations for maybe 5 years.
Thank you. Michelle, to you, how does your work directly relate to unlocking conscious capital?
So, thank you. Hi.
Thank you.
So my own background informing this particular panel is a very different voice. It's basically the voice of three wrong ends of different continuums in terms of unleashing conscious capital. Because conscious capital, if it needs to be unleashed, I think it probably prefers to be unleashed on the other ends of these continuums. So the first one is the continuum of size. You know, we work in small markets like Ecuador, where scale is very difficult to achieve. Even if you were the best, absolutely most successful chocolate maker in Ecuador, you're like, just the market is so small that it just doesn't really like make you think, okay, like this is a company that's going to change the world's problems. So that's one wrong end, and of course, conscious capital probably doesn't want to be, or is not as easy to be unleashed there. The other one is the end of stage. We work with early stage social enterprises, and that is responding to just a very real fact. Social enterprise ecosystems in small markets are earlier stage because they've come to this world much later in life. So what that means is that we're working with very risky possible investments. So that's the other end. And then the final end is just simpler instruments. So IMPAQTO has been around for 5 years now in Ecuador, and we've fallen in love with the problem of what do we do with all this incredible potential that is early stage in small markets. Like, do we just forget about them and maybe all move to India and Mexico and Brazil? And we've decided, no, we're going to stay here and see what works for here. And what we have found is that we need to redouble our efforts to bring these voices to the bigger fora, to really say, we will try our best to be scalable models, and we will try our best to be, that simple tech solution that will change everything. But at the same time, we want conscious capital to understand new ways to be unleashed into these different smaller markets. And that's the voice that you'll probably hear from me. In the end, we have one of the beliefs we hold dear is that life-changing or world-changing innovations can come from anywhere, and most often they come from small, unforeseen places. So you just think about microcredit. Like it came from Bangladesh, not from Wall Street, and in that same vein, we could be missing out the new Mohammed Yunus, who's probably walking around with fantastic ideas, a lot of strength, I'm thinking in Spanish, in ganas. Yeah, a lot of ganas to change the world, but has no access to these conscious capital that we're talking about.
Thank you, Michelle. Jacqueline.
Perry, it's funny what you said, young people, the next generation, the question you're asking. I was struck that I think the question most young people are asking me these days is, how can you be so old and still so enthusiastic about the work that you do? True. And
didn't look great.
And the other thing you said that was so interesting to me is that the money is not there, and I think the reason I can still be so enthusiastic, and this is true, is that it's literally been like the last year, maybe since the last election, that there's been such a wake-up that I'm actually seeing for the first time in the 18 years that Acumen has been around, a real conversation about new facilities of capital and how we need to structure them differently to meet the ends we seek. And so, if anything, it's made me look back at 18 years of investing patient capital, all philanthropic-backed, long-term investments in companies that are solving problems, to really trying to unpack what it means to see investment as a means and not as an end. And that's what's got to change. And that has pushed Acumen to our next chapter of focusing really on three things that start not with investing but character. If we're going to talk about conscious capitalism, we need to focus on the character to actually have the guts, the resilience, and the goodness to solve problems. Then we can structure the right kind of capital. And then around that, what is the community that's needed, not just of investors and entrepreneurs, but frankly, all of us. And so I really think it's this room, and so many of my heroes are here, that we need to help build a moral revolution, if there is, for this next generation that really focuses on role models, business models, and then how do you spread an ethos of getting serious about the problems we're solving.
Thank you, Jacqueline. Sean.
Why did I pick this seat?
Yeah, I
Mr.
know.
Jacqueline?
You chose poorly, my friend.
I did choose poorly. This is the worst seat in the worst session on the worst day. All right, I'm going to do what I can to save this right now. So, years ago, I used to work in the film business, and there was a story that went around about when Sony bought Columbia, and the Sony execs came in and they took a look at this film studio and they scrubbed all the numbers. They looked back at their history and they came back to the board and they say, "We've solved it. We've figured it out. These guys have been crazy all this time." You know what the answer is? You should only make hit films. And if you only make hit films, you just make a lot of money. It's so much better. I don't know why they do all these rubbish films. And so I think it's a little bit like in the impact investing industry when, you know, Bono and TPG invented it a few years ago. And you know, this idea that, you know, it's been a way for good people to do bad deals. I think that, no, it's surprising how many smart people, even at TPG, don't understand the difference between causation and correlation. So the fact that there are deals that exist in which people can make out like bandits and look really great while doing it can really make a lot of money and can also have huge impact. I don't understand why that suggests that that should always be the case, nor whether there is a positive correlation between the two things. And the idea that there is, in fact, I think Jacqueline and I and many of us think that in most cases there is a negative correlation between those two, and that actually there is some form of, you know, pie that gets shared up here, and that we have to be honest about those trade-offs. I think that what we do is to try to deploy our investment capital, which is, to be clear, philanthropic, which is not for which, you know, pension holders in the Midwest are not, depending on our return in order for their retirement. So this is not every form of capital. I'm very, very conscious of the privilege and the luxury that we have in being able to exist in this part of the sort of capital structure and the capital stack. But for us, we try to invest in ways that create pathways for others and that fund things that will, at some level, have systemic impact on shaping capital flows and will draw others in over time. But we see sort of three categories of things that we can invest in that I guess are going to come in this kind of conscious capital. These are areas where we will deliberately make investments where there could be a negative return. One is the forms of public goods, where the social impact is such that these are forms of activity that don't have a fundable, viable, investable business model right now, and they probably don't have the prospect of that, but we should do them anyway. We've been funding independent media around the world, and we know that we will lose money when we do that, and we will keep doing it till the day we run out of money, because we believe that is a public good, that's holding a flame for social justice and for open society, and we want to keep doing that. The second is businesses or even ventures or sectors that are so early that those who come first will not make a viable return. We have to be honest about that, but we recognize that we're paving the way for others that will. We've seen that. We invested 10, 12 years ago in India, in early stage impact investing in India, and the first money that we put in on an ROI basis over the time absolutely was not viable, would be what we called conscious. Now, some of the subsequent investments we've made and what has now created the opportunity for are absolutely in the Bono school of doing everything at the same time, having your cake and eating it. The third category is risk. We try to invest in places and take risk that no sane or sensible, rational, and pension fund investor would or should do. We have invested in early, investments in Palestine, in places and parts of the world. We've invested in the Ebola-affected countries in the midst of that crisis. And we try to do that and try to take risk that in places and in contexts that others wouldn't. And we go to our investment committee and we say, hand to heart, we're going to lose 50% of our money right now, but we think we should do that, and here's a case why, here's the impact that justifies that. So we can talk more, but we think about those three as real categories of investments that need to be made.
Beautiful. Thank you. Section 1. Is the market working for entrepreneurs? You all work with entrepreneurs in this middle space to some degree. And it would be great to get your perspective. I'm going to begin with Perry, and then we're going to open it up for a conversation, and then we'll open it up to a Q&A. Is what are we seeing right now of the experience on the entrepreneur trying to find this conscious capital for those that are not trying to be a unicorn, nor are they clear targets for grant capital?
For sure. I've been waiting to have this conversation with an audience like this for many, many years. Of course, I'm speaking about my own experiences with Kickstarter. It feels like there's 0 people out there. I can't tell you how many people have solicited us to meet with us, to want to fund us, and then I spend months talking to them, and at the end, we don't have a bucket that does that. And I'm like, well, these 2 buckets do the impact that we make that we would qualify for 10 times over. And then this other bucket where you need to make at least X percent, you can get a little bit of that as a bonus. And you fund both these things, and you literally can't put them together in your mind. Or usually as the manager of the money, you don't want to be the first person out there. You want to wait till Ford does it, or Emerson does it, or somebody does it, and then you'll do it. The only people that really a conversation anymore that I'll even think is not a waste of time to begin with is if you're talking to the person that cuts the check. That's it. And, I don't mean to say that if you're not that person, if you're really looking to kind of face this head on and establish some new ways, that I would love to still talk to you. But what I find is that at the end of the day, nobody got fired for buying IBM, and that's kind of how often the rubber meets the road. And so I don't get it. I don't get it at all. I mean, I really just don't. Like, to me, the fact that as an alternative hybrid structure that we can make profit, which we can lay out exactly how of the $3.5 billion that's come through Kickstarter, how little of that has gone to shareholders and the founders. Like, that can just be all laid out factually. And the fact that there's like some slight possibility and dribble of that disqualifies, makes every bit of impact we make completely not exist. It's like, I just cannot grasp this. And then I think the other factors are too, is that the space we play in. So we're a quote-unquote startup. So startups don't need that, right? But, there's never going to be more startups that are doing this if Kickstarter can't get money. It's done. We're just guaranteeing a world of Facebooks. right? If I cannot raise money for Kickstarter from people who don't want us to have like, oh, you're in the market or better risk bucket, this is a wrap, people. It's over. It's absolutely over. And then we're a US-based company, so you don't need money, right? People are giving money. The money goes to, of course, all the wonderful things that need the money. So don't let me seem like in any way I'm saying denying that the places where the money goes are very worthy. But then in the kind of first world context where I see the money going to is what I call green dry cleaners, which is places that do some established service that will minimize the harm of the service they do, but the mission itself of the thing is not to create impact, it's to harm mitigate. And you can still say, oh, they're going to make much better than market returns. And it's that's the stuff in the first world context that I see get funded in the quote-unquote social impact space. It's green cleaning supplies and organic food stuff that you still think you can make a lot of money, and don't get started on like clean tech and green tech where you still think you can make $1 trillion, which is all good stuff. My point is not that the money shouldn't go to these things. My point is that it feels like, in a way, the only thing that's seen in the first world context. And what world are we creating where we're basically going to reinforce the system where we only have for-profits that are profit maximizing? And like companies like Kickstarter and all the people coming behind us are going to die on the vine. Because we start with one hand tied behind our back, but at this point, it's 2 hands and a leg. I mean, you know, and then specifically for us, I mean, it's not just for the thing we do. If I remind you, the thing we do is that we take that money, and it's like 1,000x gets distributed out to 150,000 people starting their own projects across the globe. And like, we can't figure out how to like support that thing. I don't know. I really don't know.
So, Perry, we could be a good show. So, no, I mean, I was sitting here tempted because I could go totally down that hole of the last 18 years of being told, you know, can you fly to London so that I can tell you that I'm turning you down? True story. True story. For a $10 million investment, because, well, the truth is you're just not a real investor. And I felt, and I was like, well, then why did you bring me here? Because the work that you do is so important, because you spend the time to create the companies that the real investors can then invest in. And I was like, but someone has to pay for that, so that the real investors, and then I walked out and I was like, wait a minute. We need a new definition of what real investing is. Because if the real investors are only those people who know how to maximize shareholder returns, then we're missing the opportunity for the real investors who are actually creating the most value for the world. And that is why I think we start with character and the redefinition of success, if you will. That we are caught in a system that rewards money, fame, power. And I actually think we're on the cusp because of this next generation. So I'm just going to be the light to your dark, Perry, here.
Oh, it's not dark.
No, but in terms of human nature, we have a system that is rewarding the wrong things. And so I think, because I'm living in your world too. I mean, I've been told no 4,000 times.
I'm sure you're well ahead of me.
No, but here's what's exciting, because just yesterday, Sean and I were in a conversation with a really well-intended person who said, you know, I love what you guys, let's say D-Light, this solar light company, I love what they do, but isn't it true that a whole lot of people put money into acumen as philanthropy? And now you're raising $50 million rounds where some people might make money. And so aren't we just subsidizing the real capitalists? And I was like, well, wait, there's 2 ways we can look at that. That had we spent philanthropy to get 100 million people, which they're over 90 million, light and electricity, that wasn't a whole lot of philanthropy. Instead, we took your philanthropy, we invested into an awesome for-profit company that long-term would have the capability to raise the kind of capital to get this out there. The money that comes back to us gets reinvested for the public good. And what I realized in that conversation is that he was trying so hard to not bifurcate his mind between this is the good stuff, but if this good stuff is subsidizing the bad stuff, even though he's doing the bad stuff too, then we're really messed up. And that's the conversation that we need to change. And I do feel it's starting to happen because we're recognizing, and here's one example where it's happening. I literally pitched a fund that the team wanted to kill me for. We were trying to raise a fund for smallholder agriculture. And I went to this big DFI. And we'd looked at every smallholder agriculture fund, so with all respect to you who are running a 20% returns fund for smallholder farmers in Africa, and we hadn't found a single one that made less than negative 20% returns. So I went to this big head of the DFI and said, we have 10 years of experience and 35 million farmers who have all these inputs, and so we're going to raise this $50 million fund, and I would like you to consider putting money into a negative 20% returns fund. And he was like, you're kidding. And I was like, I'm actually not kidding. Because if you look out across the world, that is what we're seeing. And so we can look at our portfolio together and decide how we can make a better returns fund. But if you want to bring private capital in, you're going to have to do a first loss. And so now we're looking at a new facility with a 50% first loss. And so the fact that conversation was allowed to happen with a very traditional DFI is what I'm saying, Perry, that I totally live that pain, and I think
I'm sure.
We're all of us live that pain.
Can I make a very quick point? Because, first of all, thank you, you're out there.
Well, I love you and what you're doing so much, and I want to find the model. Yeah, I just believe we're finally at a moment where we can build those models.
I agree, and I think more of what I'm saying is I want to just say that we're now in the moment, and it's now. And so for me, yes, Kickstarter. I'm thinking about my organization, but I see all the energy coming up behind us, and that's really great, the energy of the next wave of entrepreneurs. And what I want to make sure is that what I'm seeing right now, which is when they ask the ultimate question, is there capital for me? And I have to tell them the truth. It's going to be much, much harder.
When you have to tell who?
What's that?
When you have to tell who the truth?
Many, many, many entrepreneurs who come and say, I want to do a public benefit corporation. I want to do an alternative structure. I want to do a cell phone company. I want to do something that's not profit maximizing. I don't want to create this vehicle for extraction, whether in the future. And then it gets to, is this going to be hard for me to raise money? And the truth is yes. And what happens, they have to ask themselves, well, do I maybe not make this thing at all? Or do I maybe create a vehicle that later I'm not going to be able to raise secondary funding? Or do I just go do it as a classic corporation and just hope it works out, which it never does? So all I'm saying is that our job is the easy job. All the energy there, it's coming. And I just want to make sure there's something to meet that.
Well, and that's why, can I say one more thing? Because, and then the Perry Jacqueline show will end. But that is where I actually think the way the energy comes is with every movement. You mentioned microfinance. We're at the beginning of it. Because we have a company called Gigante in Colombia. We were able to, use Acumen Partners. So you have a community, which is the most important piece. That's where we've got to be the community that was willing to create a mechanism to work with poor farmers, completely not trusting each other in a post-conflict area. We know it's going to take us 10 years even to build the trust amongst them to make this work. But at the end of it, they're going to pay us out. And that is and they're going to own this company. And that is the structure. We can't have a portfolio if they're all like that. But that's why I'm so focused on where is the community that sees this and is willing to model this for the world, because I think the world wants it.
I mean, I think that's what
Just a
this
second.
is.
Sorry.
I'm going to let Michelle go ahead.
I do want to jump in there because I'm glad that you mentioned community. And I'm thinking, I guess I'm speaking from the perspective of this next wave, next generation of entrepreneurs that Perry was just mentioning. Because I know that from my perspective, I'm just giving you like the whole emotional, whole out like vulnerability perspective. For 5 years, we've been so scared of saying, "My God, this is so hard," you know, and having Perry and Jacqueline and Sean saying,
"My God, it's so hard."
It is so hard. You know, it does give us permission to say, okay, maybe we don't have to make it so hard, and that in itself is a huge step forward. Of course, saying it is so hard is just not enough. And then going back to the question of that you presented, is the market working? I mean, I would say I have an absolute no answer, and then I have a hopeful answer. So maybe I'll start with the absolute no so that it's not all gloomy. The absolute no is, so IMPAQTO is an accelerator of social businesses, or the next generation of B corporations in Ecuador. We have a portfolio of 152 graduated companies. They're all incredible. Some more incredible than others. And about 90% of them do not have access to this conscious capital. Why? Most of them are falling in this missing middle of finance. So they're too big for microfinance, definitely too big, like a completely different context, but too small for the smallest ticket size for a fund in Latin America. So the smallest ticket size I've found is 250,000 revenue companies. And some of them maybe are grazing the bottom of that, but it's still not enough. And just turning this around, as an accelerator, what am I supposed to say to them? Sell more. You have to get to that size to even be considered. But when I'm saying sell more, I also have to be very careful to not be pushing them to abandon some of the impact, or maybe dilute a little bit of the impact that they set themselves out to make in the beginning. So that's the reality. We have the entire middle of the funnel is never really going to make it. And then on top of that middle of the funnel is mostly people who have family, friends, and fools who have the money to help them out. But once that money runs out, it's over. So I do worry that the world is maybe missing out on all these incredible entrepreneurs because there's no middle. And the lack of that middle actually comes from maybe like a lecture that I watched on YouTube by Sean. I'm a groupie. I'm a fan. So it does come from that. That missing middle is because capital is not interested in making small deals. And the small deals are the microfinance, which is sexy for another reason, because there's the base of the pyramid. So that there's that. But my hopeful story, which comes back to something I shared with Perry in our prior call, it's the same thing. We are a big corporation. And we're a strange big corporation because we are a business that hopes to help other businesses grow. And of course, we do need philanthropic dollars to fund high-quality accelerators like the ones we run. And we looked and looked and looked. And then we found two amazing people within the Inter-American Development Bank who were absolutely afraid to be the first ones to make a grant to a for-profit business in Ecuador. We're still fighting with tax authorities who don't understand it. We're still fighting everyone within the bank that does not understand it. It's really hard. But they did it. And after that, 2 additional grants have been made to social businesses. A big part of it has been becoming a B corporation, getting certified, giving a name to this thing that is in the middle for all these minds, like you said, that refuse to be bifurcated.
No, they love being bifurcated.
Oh, they love being bifurcated. Yeah, exactly. That refuse to
integrate.
To integrate, exactly. So then, there is some hope. That the Inter-American Development Bank would take such a big risk that there would be some, I guess, infrapreneurs there that are willing to be rebellious enough to try something different, and that does happen. And I'd be happy to also send them your way too, because you never think that here's Perry like having a hard time, but and this small B corporation in Ecuador finding different ways to open up that middle space.
So Sean, we've had I'm bringing you in, brother. You ready? So there's been already some conversation about the impediments that are getting in the way of people like Michelle and her companies and Perry finding capital. We've talked about size, we've talked about geography, we've talked about return expectations, and there's this missing middle that seems to be eminently fundable. It doesn't, right now, according to our experts, isn't finding the capital. Like, what are the other impediments that you see out there right now that are getting in the way from these types of entrepreneurs finding the money that they need? And I know, Jacqueline, that we have hope on the horizon. I want to find out what we got.
I've had incredible pain. I just feel a little bit of hope.
We're going to need that hope.
I agree.
Perry's on our panel. We're going to need that hope.
I was coming off as so pessimistic. I mean, I'm optimistic.
I know you are.
You're realistic.
I'm just, I'm here for an hour and 15 minutes. I just want to, be direct.
I love that.
Mr. Hinton, what do you got for us?
So, I just... firstly, on the missing middle thing, I think it's a real thing. But I have to say, my whole career, no matter what stage I've tried to raise money for a business, I've always been told I'm in the missing middle. So I don't know.
Or the wrong bucket.
I don't know whether it's because I have a rain cloud and it just follows me, or whether that's just a line that people give you when they don't want to fund you, or so. I don't know. I worry about that as a sort of a diagnosis because anyway. I feel like that middle has been following me around all my career. But but let's talk about some of the other barriers. I think we have to acknowledge that there are vested interests that don't want or that are actually sort of concerned about this sort of capital developing. I think there's a very interesting dynamic that goes around development finance, where where private capital has basically compelled the governments and the bilaterals that are behind development finance to not allow them to fund in a concessional way, because that would be seen to be crowding out the private sector. So there's this sort of weird thing that goes on with an extraordinary institution like the European Bank for Reconstruction and Development. Those of you from other parts of the world may not know, but the EBRD does really, really extraordinary work in very difficult parts of the world, deploys real capital in some very exceptional ways with a very clear development mandate, but is prohibited by its mandate, which is a result of private sector lobbying, from pricing in a concessional way, even if they do that in order to crowd in other capital, because that turf is protected. So, of course, private capital doesn't step in to those areas where they will finance, and so it just doesn't happen. So I think we have to be really conscious of the fact that there's a lovely saying, this law of technology, Kratzberg's law of technology, that technology is neither good nor bad, nor is it neutral. And I think that can be said of capital as well. It's neither good nor bad. You can use it for either. But let's be clear, it's not neutral. And there is a great deal of sort of intentionality about a lot of the private forms of capital, venture capital and others, that do have some vested interest in seeing some of these forms of capital not develop. I will say, as somebody that runs a team of investors and has to manage with an investment committee, that deploying this sort of capital does have its challenges. It is genuinely difficult to disaggregate and to have a dialogue with an investment committee to disaggregate bad deals from good deals that are in this kind of territory. We don't have, as we all know, sort of good predictive impact measurement tools that allow us to do some of that. I'm not an entire believer that will sort of magically solve this problem. But I just think we have to be honest and say it is actually very difficult, and this can be an excuse for justifying. I made fun of it earlier, but it can be an excuse for justifying a whole bunch of things that really, otherwise maybe shouldn't get funded. The other thing in managing a team of people that make these investments is that it's quite hard when you take very long-term capital to incentivize and motivate teams of investors to work with this kind of capital. Now, Jacqueline will tell me that I'm just crappy manager because she does it incredibly well and has this phenomenal team of motivated people that do it. And I don't mean it's not purely...
I would never say that, by the way.
You would. She would. She totally would. But I think it is difficult, and I am observing some of the strange dynamics that come up in teams. And it's not to say that people are not motivated to do this, because they're committed to the impact. They see the incredible opportunity. But it does become difficult for people to track and to know where they are having impact and what they are looking for and what success looks like. And so I just observe that as one of the dynamics in being, not to sort of make it about us, but there are good reasons why people struggle with deploying this kind of capital. I want to,
super helpful. So we're going to now open it up for a couple of quick questions, and then we'll do our second half of our count. I think you had the first hand up.
Louis Borston from Osprey Foundation, and we make very early stage, very high risk investments. Two questions for the panel. One, it seems to me the impact investing industry has been saying the exact opposite of what you've been saying. For the last 3 to 5 years, every email I get from Chen or some group like that is saying there are billions and billions and billions of dollars of this capital. And I don't, that's rather different from what you're saying. So how do we get the people who are supposed to be the proponents of this industry to talk a little more honestly about the fact that a lot of what they now call impact investing is what we used to call socially responsible investing. They've just sort of changed the definition. And the real impact investing are people who are willing to take risks like that. The second question is, I have encountered over the years people who do not see no continuum between a grant and a commercial investment. It just seems that it's very hard for people to understand that there is something in between there. Omidyar Network, among others, has done a very good job of publishing on this and trying to set up that there's a continuum. But I'm wondering if you've got ideas about how we help people see that continuum so you all can get capital more easily.
I'll just try to be really brief. And I think I say a lot less if I speak first, so I'll just try to get out of the way and just pull back. So about a year before I launched Kickstarter, and I never worked in a tech company before in my life. I don't code. I came at it as an artist. I remember meeting somebody who could potentially be an investor, and I was willing to meet anybody at that time because nobody had any interest in meeting me. And I told them the idea for Kickstarter, and they looked at me very, very straight-faced, totally genuine, and said, why would anybody give anybody money for their project if they're not going to get a piece? And what I saw in this person's eye was not them being, kind of cheeky with me, but a real, it doesn't make any sense. And so here we are, 10 years in, $3.5 billion later, 150,000 projects funded later. And that's all we need. Once we did it once 3 projects succeeded on the site in the first week, it was done. Mm-hmm. All we need is a couple of things funded, speak about how it's not the same as the old social impact, and I think that everybody just waits for models. Everybody can't create the language and the models on their own. Once a few people step up and do it, it allows everybody else to replicate it. I think the intent and the capital is generally there. I think it's just this tiny, tiny, tiny little step. Anybody could have invented Kickstarter. That design step was needed. And I think it's the same. And so the sooner we can do that, I think the sooner there will be this unlocking of this, and it just takes a few people to see this as an important problem to solve, and it's there to be solved.
Please.
if I could just say one observation, and it's probably far less inspirational, but yes, I get the same newsletters, but what I do hear is a lot of frustrated portfolio managers that keep saying, hey, the deal pipeline is just not there. I'm sick and tired of the same revolving door of the same 10 social entrepreneurs that are that the ones that have made it to that size. And there is frustration. So the reason why this panel, I think, is important is because this frustration needs to be aired out and spoken about openly. It's not a frustration that, hey, I'm sorry that my people can't make it. It's too bad. But it really is threatening, really, the future of what impact investment should be. And we shouldn't assume that impact investment will just grow and it's this bigger thing of the market. We are the market. So going back to questioning these newsletters is a really important step. It's just saying, hey, how could these two realities coexist? Well, they do, but they're really frustrating. I think it's just a matter of taking steps towards dealing with that frustration. And then just an additional thing to that frustration, I also get the same thing. People want all of this deal pipeline creation to be free. So I get to speak with impact investors, and they're like, "Oh, well, your work is fantastic. We would never have a deal pipeline in Ecuador if it wasn't for you." And then I say, "Yes, this is. I've worked for free for the first 3 years to make this happen. How are we going to make sure that this is sustainable? How do we make sure this doesn't get shut down? And you do need those philanthropic dollars to make that happen. It doesn't happen naturally because, like you said, capital is not neutral."
It's funny, this thing about sort of, for-profit capital wanting these things for free. One of the reasons is because that's what the venture capital model is built on. It's built on massive government subsidy. I mean, so I think that industry is sort of hooked on it. They just sort of don't want to admit it, and it's built on this sort of narrative that that we're job creators and it's purely the private sector. But, Tesla's built on $350 million of government subsidy for tech. Google, the algorithms, they all come out of the, public education research sort of system that has developed this. So I think there is a sort of a presumption in the big end of the for-profit sector that somebody will actually be subsidizing that. And the sort of dirty secret, of course, is that it has been usually government. But nobody really wants to acknowledge that. To speak to this point, I think that's right. I think the work that Omidyar did and on the return spectrum is really valuable. I think there is. I was looking at the paper again the other day. They characterize all of these as C1, 2, and 3, which is that gap between grants and sort of marginally capital preserving, or sort of marginally positive, but concessional. I think the thing is that in that work, there were very few examples of that. There's very little work around that. I think that this catalytic capital consortium and the catalytic capital is a similar idea, is trying to push people to think about being intentional in that part of the returns continuum.
But hopefully more realistic about what they'll actually get back.
Yeah, well,
and just
right.
to add really quickly, Louis, because I think it's a really important question. And again, I look around at who's in this room, and in a way, I feel like the four of us are redundant in that we all know, we're at risk of just speaking to each other and feeling really energized, and so what you're making me think about is two things. One is, and I keep coming back to this idea of moral revolution and how do we redefine success. One is, how do we actually get better and better on measures? And I know you just said, Sean, you don't really totally believe in that. And I
don't think it's going to be a panacea.
It's not a panacea. But the work that Tom Adams, where's Tom? Raise your hand so you know him, over there, did at Acumen in terms of really listening to the customer and building a set of impact metrics that could then end up benchmarking from their perspective what works and what doesn't, is a real contribution, so much that we're spinning it out into the world. And I think that's one piece to is how do you actually measure the stuff that matters. And the second is we haven't done a very good job as a field at telling the right stories in ways that capture the imagination. We're in a moment in the media where bad news sells, the outrageous works. We've raised capitalism to the rank of a religion, and then the ones on the others, the atheists, are like, it's bad, rather than, is there some way that we can truly, and I feel like we haven't been very good at it at Acumen, can we actually create a more nuanced story in this age of 140 characters? Because I do think that we're on the verge, but we don't have the tools, the rules, and the role models that are needed.
But I think that's extraordinary that you don't. I mean, you more than anyone have told this story incredibly well, and I mean, and I'm not just saying that because you said nasty.
You're
things
trying to
about
get better
me.
at get on my good side.
No. But I think you've done an extraordinary job of communicating the outcome and the benefit of it. But I think, are you saying that the bit that we haven't done a good job of is the trade-off? Because I always think, for those of us with philanthropy, who work for philanthropies where the money is sort of essentially a given, is essentially there, we don't have to make that case. We don't have to prove. It's, again, a very privileged sort of position to be in. But you do. You have to raise that money every year. And so you're in a difficult situation where you have to kind of, you sell the vision of what's possible because you have to raise the money. But on the other hand, telling that nuanced story undermines the sell at some level, doesn't it? I mean, that's a really difficult tension to tell that story in a nuanced way, in a way that still attracts everything. Because the simple thing to do is to keep spinning the story, is to keep telling people, you can have it, you know.
I think in a way it goes to you at 5 years and even at 10 versus 18, is that I think I went through a period of like, let me tell you how amazing this is. And then I started feeling like, wait, I'm not fully believing that. And now I feel like, wait a minute, we can be... when you've gotten 270 million people around the world access to goods and services, and you've been able to leverage $600 million into these companies using this model, don't tell me I'm not real. This is real investing. And so to be able to stand there more unapologetic, we just hired an amazing new communications director. I'm so excited. I can't stand it. And he was like, this is going to be a challenge, because I was like, I think that maybe to find the right community, and I feel, Sean, that we're finding it, you're part of it, is that we, and I say this is not just for Acumen, but how I'm thinking about organizationally, is that if you're going to find a group that wants to help build a movement, they have to have the courage, the moral courage to stand first and foremost with the poor, the vulnerable, and the environment, and then figure out the kind of capital that we need to solve our problems. So I used to be really good at I would tell this story and people would come off and they'd be like, I think you are like Mother Teresa. And I'd be like, seriously? Do you understand what it takes to build something like this? Now it's like, all right, if you believe in investment as a means, not as an end, if you believe that we have to focus on the long term, not to the short term, if you believe in stakeholders, not just shareholders, if you really believe that we have to find the right character and stick with them for 10 years, then we're your people. If you don't, we might not be for you. And he's like, that's kind of a counterintuitive approach. But I actually think that's where Louis, that's maybe where we have to start to stand. Because I think that's where the next generation knows we need to go. But they don't really believe. When they hear impact or purpose, they're kind of like, yeah, show me. I actually believe that I look around this room, I would look at you, you're showing. And so how do we put it forth, not in a way that says you're bad, you're this, you're that, but that there's a new wave coming. And it's really hard, but you want sparkle when you're 80, you got to fight for that wave. And that's what I think.
In the back, please. And hold on till you get the microphone so that they can hear next door.
Hi, my name is Paul Van Sale, and I'm a co-founder of a place called The Conduit, which is in London. It's a community of people who are passionate about positive social change, and we've been open for 6 months, and we have 2,500 members. And I want to sort of maybe pose a question, but I think everybody in this panel in some ways for various periods of time has created this tipping point that I really feel that we're at. And I don't want the room to be left with any sense of despair or gloom. I'm definitely Panglossian in terms of just seeing the world in a positive shade. But I think there is a massive group of people who are building impact companies, and it is a wave of people. And there is a boatload of capital out there ready to receive them. And I don't think that the constraint is capital. I think that the constraint is that you guys have been planting the seeds for 18 years and a decade, and it is now bearing fruit at a pace that is astonishing, and that the technologies that we have, the revolutions that we're able to see, are kind of matching the level of existential urgency that we have, and that the real challenge is, in fact, incubating that group of extraordinary entrepreneurs and getting them investment ready, and then taking that capital that's out there. And I think that's really just about giving people space and infrastructure. So I would actually not bemoan the absence of capital at all. I would actually say we need to be training, equipping, building, supporting, being generous, inviting, introducing that group of people who are solving stuff to the capital that's out there. And so I'd almost go back and say, who is doing the work to accelerate that group of people who are capital ready? Because I don't think it's the capital. I think it's your generation's paying off, and we're sitting on it right now, and I'd be really optimistic.
I think we're saying the same thing.
We're trying to say it. We're not saying it as well as you are, but I think we're all saying.
And just, I guess, to answer that question, I think that I think we agree. We need to really there's this capital, and then there are all these opportunities to make impact. But I think that we're probably missing the key word, and I think somewhere up there, unleashing. And when you unleash capital, you don't want it to go crazy and stomp all over all these impact entrepreneurs. I think at least what I'm trying to say is we need to do it right, and that capital needs to go to the right places, and it needs to be using the right instruments. Because otherwise we could be making a terrible mistake. I think, and I definitely don't say I'm bemoaning the lack of capital. Like I said, there's all kinds of portfolio managers that are super frustrated because they have millions that they can't place. It's more a matter of, maybe it's going along with your narrative, working so hard and getting almost there, but it being so far.
Which is just to piggyback off what you're saying, which is that. We all agree, and like coming from, say, my work on the web, the story of the web, the social web specifically, is formats. Whether it's Instagram, whether it's Twitter at 140 characters, Instagram, a photo, a filter, and a following model, and a stream. Yeah. The creativity is unlocked, whatever you think of these companies, and I can go on all day about that, but we've seen the creativity unlocked through accessible formats. And that's the point, I think, that I want people to understand here, is that that's the same old story, right? Accessible formats. So any intent there is to help solve this problem, the best way to do it will be creating as simple formats and instruments and language as possible. Like I'm talking about one blog post with 6 paragraphs, and then people understand what you're talking about, and they can replicate it. And that's the win. When you think about movements like against smoking and things like that, they accelerate when you have language like secondhand smoking. With alcohol, when you had Mothers Against Drunk Driving. Before that, you have 30 years of people being like, I know this is bad. Until you get that until you have the one pager, it doesn't unlock it. And so I think it's a very attainable goal. What it just does take is the people that have the capital to say, yep, I'll fund that.
Yeah.
And there you go.
Including to fund that. Including to fund actually building the communications piece for this. Because what you're saying is also better than a better way of saying what I was trying to say. What you said is so important. And that's what I would say back to Lewis, too.
And if I just may step in and speak for Bart, and I'm going to speak for you, too. I think that something that was pivotal, at least in Latin America, was this amazing group of people that discovered the B Corporation movement. And I remember very clearly when they must have made that first investment in translating the whole glossary that is what a B Corporation is. It's this hybrid, it's this really weird path in the middle. Translated it all into Spanish and into Portuguese made all the difference. For us, we would have never gotten a grant from the Inter-American Development Bank if we didn't explain to them, we're not a regular company, you're not giving a grant to this money-hungry capitalist entity, we're a B Corporation. We're so nice. But the moment where, the moment we empowered ourselves with this language, with this terminology, it all made all the difference. So just going back to that, it's the formats and formats matter.
Yeah, you think about on the for-profit side, right? There's always been funding where you set a valuation and whatever, and those deals can get quite complicated. There's all these clauses and board seats and the venture side or angel side of things. Yeah. And then at some point in the last 20 years, came across the idea of convertible debt. Now, the only point I'm making about convertible debt is just it was 10 times simpler. And that's the point I'm making, whether it was better or worse, whatever. It was from 100 hours of work to 5 hours of work. And so just examples, I think that at the end of the day, complexity will eat you up. So you think you're covering all the ground in the documents, but really just unpacking those by the people that are working on it in 7 years from now that didn't make the deal will be in everybody's worst interest, right? This stuff, there's no, the people that get paid to introduce and then be experts of the complexity need to step away from that approach and find and find their power in doing the hard work of creating the simplicity.
Thank you, Perry. Right here in the front, please.
Thank you. Hi, my name is Thiri Tamon, and I'm loving this panel because it's a lot of the issues that I've been grappling with. So I've recently, in the last year, entered the world of development finance, graduating from commercial capital investment banking. And I did that because I'm from Myanmar, and my country has all the things that you can imagine: civil war, fragile state, new democracy, transition economy. And I felt that development capital, conscious capital, was what can help my country. And I'm not going to name the organization that I work for, but because it's a great organization filled with great people trying to do good things, but somehow that DNA is missing. And I find that DNA gets missing when we're trying to deploy this capital that's supposed to, you're supposed to be catalytic, you're supposed to be able to lose some money. Surely 100% losing money, which is grant, versus losing 20% should help, right? But you've got investment teams that are motivated. You've got a mission that is clearly stated. But when I take my deals to the investment committee, suddenly it fails. And somehow the DNA between this sort of hybrid DNA between grant money and for-profit investment is somehow missing, even at the level of the investment committee. So it's not that I'm making a statement. It's more really having the panel that we have, which I think is fantastic. You've grappled with this for years. I'm only facing this for the last year. How do you see that? And how do you think that we can actually generate that DNA?
I don't think it's the DNA. I think there's insufficient positive feedback loops. So I don't think it's the people themselves and the intent that they have. It's that they're in a structure where if they make a decision to do this, the structure won't reflect back to them that that's a success.
I agree, and I would say, God bless you. First of all, I just want to say thank you for being just so forthright. And I think that it is the structure, and it is, and I think it's the DNA in that we sometimes create investment committees that they want to do the right thing, and they're looking through the lens of where they can add value. And so my suggestion would be to take a look at that IC and think radically around, are we just putting classic investors who will be comfortable in the realm of ROI, EBITDA, valuation language, but they're not necessarily operators, entrepreneurs who actually are on the ground, or nor do they understand the realities. And so I actually think it's a combination of what they want to do the best that they can be doing, and they think that's their job. But if you're clear on what your mission is, then how do you, one, make that clear, and then two, make sure that you're not just making investing a secret society for people who can throw the same symbols and numbers back at each other, and those who are operators, entrepreneurs, or artists, if that's what you're trying to find, to actually have make that radical step of putting them on. I think what you go through is what many, many organizations go through.
I guess more practically speaking, what I would say
That was
is
practical.
sorry. As an example. I don't know. There's something about everything Jacqueline says that feels like it's like life-changing.
Which it can be practical.
It's true. It's true. Didn't mean any judgment by it. So yeah. Okay. Maybe just one thing that we found like that has helped in our short period of time is just finding that one example case that will have the demonstrative effect. So just really work that one case, because the more you can go back to be like, oh no, this is not strange, this is like that one time that it did work, remember? And then everyone starts nodding, and it starts becoming a thing. And the other thing is definitely like latch on to these to using the language, right? Like in our case, we said B corporations. Try to find validating options that will speak for you in that sense, because that way it's not you versus them, it's an entire movement that you're opening the door to.
Can I add one other thing that might be helpful?
More practical?
No, well, you may not think it's practical, but just from experience, we haven't used the word power once in this room. And one of the things that we went through is sometimes when you have local a local team that are looking for investments and getting them investment ready, and if the IC might be global or elite, the way that it's presented may not actually fit the way that the people on, I see you're shaking your head, understand. And particularly in hierarchical cultures, sometimes the relationship manager might not fight in a way that we would assume the RM would fight for something that they'd worked on for 6 months. And so one of the things that we've instituted is you can sometimes come back to the IC, that if the IC throws it out of the room, and maybe for good reasons, but it's for a different reason, we've had people come back, and it's actually changed the culture.
And I think to pick up on that, I think this problem of the lack of proximity from decision making to impact, the sort of the distance that we have, I think exacerbates that difficulty in making the leap. And you tell stories that sort of cross those boundaries, and finding examples that precedents and things that allow people to make analogies. And I really like what Perry is saying about simplifying and sort of streamlining it, formatizing it so that people can see patterns in it and can sort of recognize one in the other. But I also think that it's we also have to find ways of closing the proximity. When you find investors who are making these kinds of real commitments, there's almost always a story about how I went to so-and-so and I saw it and then I realized. And I do think I've come across a couple of organizations that are, about helping to bridge that experience gap, that sort of impact. I think the impact experience is one of them. A very bright group in the US who do that. It's about trying to, close the proximity gap. It's difficult to do that sort of one by one. It's fine.
Yasmina.
Jacqueline's chairing me.
That's right.
Thanks.
Don't worry about me over
Thanks,
here.
Scott. We're all good. We're all
Just
good.
a really quick comment, and
we
actually
got it
this
from
is
here.
sort of for Bart, but I guess I want to highlight, since we're talking about unleashing capital, we're talking so much about the impact investing world, but I think in terms of where capital is really coming from, where it could be coming from, I don't have all the figures, but I think looking at foreign direct investment, corporate procurement, where is there capital that could really help to drive these kinds of innovations and new business models that don't rely on the kind of insulated impact investing world? So I just want to really highlight, I think if the mainstream corporate world, through its commitments around sustainability and inclusive business, had a very strong bias to using its capital and resources and procurement to support emerging enterprises, we could see a huge flow of resources and capital that totally overshadows the impact investing world.
So just since you gave me the opportunity not to be moderator for 2 seconds, we should have another panel at another time about that issue, because fundamentally it is far too often that we talk about the flow of investment capital instead of the flow of all the rest of the capital deployed by a business, which frankly can be just as, if not more, impactful through who you hire, what your supply chain looks like. There's just a massive amount of moving money that can elevate impact to some degree, to a far greater degree.
It's a second-order problem. If you want to solve the modeling, you need the people who can make the fastest decisions, and it's not going to be bureaucratic structures. So I
can't fight with a panelist. I'm not allowed to do that.
Harry, I don't know if that's true. I was just thinking.
In an hour from now, we could have a model from this room. That's what I'm saying. That's the fastest way. Like in an hour from now, you could be halfway to a blog post and a format.
So to that end,
like versus going to a company that can be a second order, like follow that, build on that, and that's wonderful. But second order doesn't mean bad. I'm just saying, like, how do we move quickly and do the catalytic things, and then things build. That's all. And when you have somebody who's like, I'll just write you the check now, and we'll solve that tomorrow, and we'll write the blog post, and don't cash a check if there's not a blog post, then you solved it. And that happens. That happens. That happens.
I was just going to pick up on what Bart was saying, though, about sort of deploying, this push and pull factors here, and deploying. We've been working on a lot with cities recently, this sort of municipalist movement, and we're finding increasingly in North America, mayors, in charge of phenomenal purchasing budgets that are able to deploy that sort of procurement in very intentional ways. What is interesting is that capital will follow those revenues. So if I think it is an interesting point that we are assuming that the demand comes from entrepreneurs, the supply comes from capital. But if we can create revenue pull, then to match entrepreneurs, then capital will follow, because capital will follow where those revenue flows come from. And I think we've seen a number of interesting examples of cities, actually pushing capital towards areas where they're prepared to purchase.
These things shouldn't be exclusive. Like, people used to ask us, like, does the NEA in America, the National Endowment for the Arts, need to exist now that Kickstarter is raising more money than them? And I'm like, this is a ludicrous question. This is not a competitive sphere. Like, the more money, the better. We want more competitors theoretical competitors to help fund creative projects. And so, in no way, I think I'm just thinking about hyper-pragmatic, how do we get there sooner? But in no way do I underplay the ultimate power of all of these channels to scale things and do things and unlock things over time.
So I'm going to interject here because we are going to be prompt, and we are already a couple minutes over. Before we thank this pretty amazing panel, I want to encourage people who want to continue this conversation at 3:15 in Seminar Room 2 in the T-Bach building. I don't know if I'm calling it the right thing, but let's call it the T-Bach building for now. There is a brain date in overflow that we can take up to around 20 people. I know some of the panel will be able to make it, not all, but as clearly indicated by this conversation, there is as much wisdom in the room as there is up here to continue this conversation, and it clearly needs a continuation. And so with that, thank you all very, very much.